Hi guys, I just want to go through some of the solutions very quickly. Um, so I've had a few conversations with people. I just want to make sure that, first of all, you're very, very clear with these transactions. As you know, there is a Quizlet. So if I was to say to you, tell me, and I can probably just make this up, if the owner contributed $30,000 into the business account as well as a vehicle and machinery worth $80,000, how would you record this? So hopefully you'd be able to tell me it's debit your bank account, debit um, your machinery account, debit your the other non-current asset. Can't remember what I said now. Anyway, you debit all those accounts and then you'd credit your capital account. So in your Quizlet, there is really a list of, and we've probably only learnt about 12 transactions, and so you can use that to test yourself. Because once you can do your debits and credits, then posting should be straightforward. Okay, so I'm going to choose I'm going to choose two transactions, and I'm going to choose this one and maybe this one. Okay, so the first thing you need to do is prepare the general journal entry. So that's going to be part A. Part B is going to be post to your general ledger, which is your T ledger. And you'll have a ledger for every single account that you have. I just want to say something about these accounts. I'm going to use the bank account as an example. So under Payler, and you should be quite familiar with this now, DC, DCD. For a bank to go up, so you can see over here, get a highlighter, bank is an asset. Asset goes up, it's a debit. For it to go down, it's a credit. So we also know that with the T ledger, and it came up in the song, debits to the left, credits to the right. So this is what we call the debit side, and this is what we call the credit side, of every ledger account. So for bank to go up, it's the debit. So on my debit side, so I'm going to my left-hand side, I'm going to put an up arrow, which means that on the other side it's a down arrow, which means that everything that I put into this side, every transaction will make my bank go up. And every transaction on this side of my account will make my bank go down. So in the same idea, if I give you another account, so maybe I'll use a loan account, which is a liability. Liability goes up is a credit, for it to go down is a debit. So what could make my loan go up? Let's say I took out a loan. So maybe I took out $10,000. So that has to be on this side, because everything on this side, on my right-hand side, my credit side, makes my loan go up. I just want to make that really, really clear, and it might be useful to draw these arrows. Okay, so now I'm going to start 2nd and the 30th. Date, detail, debits, credit. And this you can please check using Quizlet, and the solutions as well, but on Quizlet. And you can test yourself by making up transactions for yourself. 2nd of April, purchase inventory on credit plus GST. Anytime there's GST, I know either my GST credit or GST payable changes. Inventory, asset goes up. I made a purchase, so I get that extra GST back. GST credit, asset, and then my third account is it's on credit, so I know it's either accounts payable or receivable. It's going to be payable because I have a liability. I owe Chamudi furniture money. How much do I owe them? So I owe them $11,000 in total. Out of that, $1,000 is GST, which means that $10,000 is my inventory. Second transaction. And I'm going to write it in a different color. So 30th of the 4th, received bank interest. So this is not a very common account, but it's certainly one we've talked about, interest revenue, because we're receiving interest from the bank. $36, revenue goes up, it's a credit, which means what is my debit? My bank goes up because my bank account would have increased by 36. All right. So how do I say this? So if I go back and I want to read this out for this transaction, which is a purchase of inventory, I say inventory. Okay, so you say inventory is debited. This is useful because that will help me with my posting. Okay, so now we are going to post these transactions by going into every single one of these accounts and putting what we've recorded in that account. Okay, so I'm going to start with my inventory account. I'm just going to list it one by one. Inventory, GST credit, asset, accounts payable. Now in your test, you don't need to write it out. They will be given to you. It might be helpful if you want to write what sort of account they are. Charmudi. And we do normally write who furniture our accounts payable is. And then we've got bank and interest revenue. Interest. And I would put revenue here because sometimes it can be an expense. All right. Let me get a different color. Let's choose blue. Actually, no, let's choose the same colors. All right, so for the 2nd of the 4th. Okay, remember how I say this? I look at the first one, inventory is debited. So now I'm going to go and look for my inventory account. I'm going to go into it. And inventory is debited. Inventory, here it is. This is my inventory account, is debited. I'm going to my debit side. So if I say inventory is debited, it means that inventory is going up, and that happens on the debit side, right? What we talked about up here. So if I write something here, I've written it in the wrong place, yeah, because that's saying that inventory has gone down. But I've purchased inventory. That's my transaction. Inventory's gone up. On the 2nd of the 4th, what goes in my cross-reference? I have a look. So my debits are these two entries. So it has to be my credit entry, this one here. These are linked. So it sort of cancels each other out. So you're trying to find the other $10,000 that cancels this one out, which is accounts payable. Accounts. In your test, please write it out in full. Charmudi. And you see I've written this in, which means that in my accounts payable Charmudi, which is down here, I should have the opposite entry, which is $10,000 inventory, which is actually what I've got here. You can see in my accounts payable account, I've got a credit of $11,000. I've only got $10,000 in here. Why? It should be 11. Oopsies. $11,000. Why? Because I also have GST credit. So now that's correct. I can see that my total is $11,000 credit. As soon as I write the GST credit in the middle, that means I need to go into my GST credit account. I go to the opposite side, my debit side, 2nd of the 4th, and my cross-reference. Charmudi. So can you see? So I've got here my cross-reference in the middle, accounts payable Charmudi 1,000, which means in my accounts payable Charmudi account, which is here, I've got GST credit. So if I get a highlighter, can you see that and that is the opposite of each other? In my accounts payable, I've got inventory. In my inventory, I've got accounts payable. Okay. What have I done? I've literally just posted this, this, and this. Yes, I am. All right, so hopefully that makes sense. And the thing to notice is you're in your inventory account. So this is in your inventory. So this transaction makes my inventory go up. So it has to be on this side. And then how much has my inventory gone up by? It's gone up by 10,000. So you need to get the amount correct. And then why has it gone up? Well, the cross-reference tells me accounts payable is my cross-reference, is the hint. Well, I must have purchased something on credit. And lo and behold, look at my mouse. I write accounts payable here, which means that in my accounts payable, I've got inventory. So this is telling me, well, I've got a liability now. Why has my liability gone up? And it's gone up by $10,000 plus 1,000, so 11,000. Well, this is the CLOE, inventory and GST. So it's the magic of accounting and debit credit entry. And can you also see your debits equal your credits? Okay, so it really is an amazing system where, and I'll talk more about this later, about how we actually do this, because it's a way to be able to identify errors. All right, so now I'm going to do the other one. So I think I wrote that in yellow. So over here, yellow, bank has gone up and interest revenue has gone up. Okay, so my bank has gone up, so up, down, using Payler, $36 interest revenue, 30th of the 4th. So that has gone up, right? If I wrote it over here, it's wrong. That's everything that makes my bank go down. And then as soon as I write interest revenue, I go to my interest revenue to the other side, $36, and my cross-reference is the opposite. It's bank, 30th of the 4th. So I'm saying my revenue has gone up, something that I've earned. I have earned interest from the bank. You will find that if you wrote it over here, then obviously you've got two debits. Yeah. If you write in here bank, well, you're saying your bank has gone up. Why? With bank, doesn't make any sense. So your cross-reference is telling me why it's gone up. So if it says here, just a example, bank has gone down because of rent, then I know that my bank has gone down, and I've got a cross-reference of rent, which means in my rent account, I would have a debit in my rent account. So rent would have been debited. Okay, so lots of checks to be made. And if you're doing it correctly, then when you check your answers, it should make sense. Another thing to remember, inventory, some students right here, when we purchase inventory is $11,000. It's not, it's $10,000 because 1,000 is GST. Make sure you know the difference between accounts payable and accounts receivable on credit, as well as GST credit, GST payable. The difference between interest expense, interest revenue, and also with sales, really importantly, cost of sales. Okay, so all of this can be found on your Quizlet. This one's really interesting. Paid back Charmudi, who is obviously an accounts payable because we purchased inventory on credit. So for this account, well, my bank would go down because I paid them. So always think about your bank account. Has it gone up or down if you paid something or bought something, as well as you don't have that liability anymore, right? And so your liability account should also go down. Okay, so you've only got a limited set of accounts that you're working with, and you're really thinking about what makes it go up, what makes it go down. All right, good luck, guys. I'll stop here. Any questions, please message.